Hello, and welcome to episode number 17 of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we'll be taking a look at the upcoming earnings report from Google parent company Alphabet. Alphabet Inc. will release its third quarter earnings results after the bell on Thursday. And while a shift to mobile computing once threatened Google's traditional search business, management has really successfully adapted to changing consumer trends by expanding into its operations into nearly every corner of the modern tech world. And today, Google and the other subsidiaries under the Alphabet umbrella sit on the cusp of dominance in several booming industries, including cloud computing, mobile payments, e-commerce, and artificial intelligence. These are all contributing reasons to why shares of Google have gained nearly 27% this year. The stock is currently sporting a Zacks rank number 3 hold, and heading into Alphabet's report date, our current consensus estimates are calling for the company to post earnings of $8.39 per share and revenues of $21.94 billion. Now, I wanted to highlight those figures because they kind of tell two different stories. First of all, Alphabet's profits are projected to slump about 7.4% year over year, but that top line is expected to grow by an impressive 20.1%. Now, today we're going to be focusing on the reason for this solid revenue growth. Did want to note it's been a year of heavy spending for Alphabet. Some of these investments into these emerging trends, and these are costly things that take a cut out of your bottom line in the near term. We should also remind listeners that Google is facing litigation, antitrust litigation, kind of in several major markets around the world. Most notably, the company was slapped with a multi-billion-dollar fine by the European Commission last quarter. So that has really taken a chunk out of Alphabet's bottom line this year. But I think the story here heading into the report is top-line growth. We're going to be focusing on that. Also want to note before we jump into everything that in this show, we're going to be using our Zacks exclusive non-financial metrics estimates. These important stock driving estimates are updated daily and based on the independent research of expert stock analysts. You can find out more about this file at zacks.com/non-financial-metrics. Google's advertising business is still its bread and butter. Don't get me wrong on any of that. We will get to the advertising business later in the show. But that bread and butter was once kind of threatened. People saw some risks in that core business. As I said, we've shifted heavily to mobile computing, obviously. And so you're getting the majority of Google search is coming mobile now. The issue for Google there is advertisers tend to value mobile ads less. So a shift to a mobile first world meant lower cost per click figures for Google. Nevertheless, there's been significant growth in total paid clicks, and this has kind of outpaced the decline in cost per click, and we're still seeing rising advertising revenues. But it's really not the only area of growth for Google and Alphabet right now, and I think that there's some more kind of exciting categories to look at. For me, Alphabet's most exciting growth prospects come from its, quote, Google Other Revenues category. This is what you'll see. So Alphabet on its earnings report, they'll separate their revenues as Google and then other bets. We'll touch on that other kind of mysterious other bets category in a bit. But when you look at their total Google revenues, they will also break it down: Google advertising revenues and Google other revenues. These other revenues include sales from the company's Google Play Store, as well as its Google Cloud offerings and its hardware initiatives. So the Google Cloud and Play Store have grown significantly, but obviously the most interesting thing to note there is Google's new hardware. Investors will, of course, remember that Alphabet debuted a new line of Google-branded hardware devices in October 2016. This new line included the Pixel and Pixel XL smartphones, as well as the Google Home, the company's new AI-powered smart speakers. Now, putting aside the kind of volatility we've seen this week based on reports that the Pixel 2 XL, the brand new version of the Pixel, is having some screen burn-in issues, and Google's investigating that. Putting aside that, we're just going to look at the Pixel and Pixel XL as kind of a new flagship line of smartphones. These debuted after the end of the third quarter last year, so we're still seeing the effects of these products in Alphabet's year-over-year comparisons. And with that said, we should see this Google Other Revenues category be a key growth catalyst for Alphabet this quarter. According to our latest consensus estimates, which again are pulled from our exclusive non-financial metrics estimates file, we expect Alphabet to report Google Other Revenues of $3.43 billion this quarter. This would represent year-over-year growth of 41.2% from the $2.43 billion recorded in the year-ago period. While we won't know for sure exactly how much of this revenue is coming from the company's hardware initiatives unless the company explicitly tells us, it is reasonable to assume that this year-over-year comparison is lifted significantly by the debut of these new products. Again, that's the Pixel XL, Pixel, and the Google Home, kind of that Amazon Alexa competitive smart speaker. Also, as we mentioned, Google and Alphabet has made these significant investments in these emerging tech trends, the artificial intelligence, cloud computing, e-commerce, mobile payments, all of these trends. A lot of this we actually see end up represented in Alphabet's Other Bets category. This always garners a lot of attention as we approach an Alphabet earnings report, because it's kind of like this weird, mysterious unit that right now is a loss-making unit for the company, and they don't break it down very specifically, and there's kind of a lot of smaller subsidiaries under this banner that's then under the Alphabet umbrella. Is not really a significant revenue generator at all, and only a few of the Other Bet side projects have really started generating any sort of cash. To note, few of those that are notable include Google Fiber, Nest, and Verily. Based on our consensus estimates, we expect Alphabet's Other Bets revenue to soar 35% this quarter, hitting $26.7 million total. Again, it's a small drop in the pond because when you look at the advertising business, total revenues are $21.94 billion. The advertising business is going to generate a solid 0.8 of that, and then the rest is going to be filled in primarily with this Google Other Revenues, and then just kind of a tiny drop in the pond from the Other Bets category. But the Other Bets category, I think, is one of that kind of allure of it, that mystery, excites investors. We want to know how these bets on things like Google Fiber and Nest are paying off, if at all. That, I should note, all things to look for. Of course, probably going to see a strong reaction from Wall Street based on the results of the advertising business. So do not neglect those results when Alphabet reports on Thursday. Of course, a very busy week for earnings reports on Thursday. Off the top of my head, we also have Microsoft, Intel, and Amazon. So a very busy week for tech earnings. Alphabet and Google, that report will be just one of many to keep your eyes on. But yeah, I thought we should highlight why one of the biggest tech companies in the world is still seeing 20% revenue growth in the current quarter. So as a reminder, if you feel that we missed anything or if you want us to cover a different story, please feel free to shoot us an email at podcast@zax.com. Make sure to check out all of our other audio content at zax.com/podcast. And remember to subscribe and leave us a rating on iTunes. As always, thank you for listening to the Zax Tech Talk Tuesday podcast. We will see you next time.